You thought you financed a car for $70,000, but it typically goes something like this.
Congrats, I got you approved for only $12.53 a month. Just sign at the bottom and I'll get it gassed, cleaned up, and ready for delivery.
But let's see what the loan actually cost you. $20,000. That's the interest alone, on top of the car. Over the course of 72 months, you borrow $70,000 and you pay back $90,000. Now, $12.53 a month seems normal nowadays on a car that costs $70,000. And here's how they get you comfortable with it.
Every $1,000 you borrow is about $20 a month based off your credit. So on a $70,000 car, you're looking at around $1,400 a month.
For example, so when they land you at $12.53, it feels like a win. It beat the number they just put in your head. And that's why people rarely wonder what that payment is actually doing. They may ask what the interest rate is, and a good salesperson will give you a number, but it's probably not your number based off your credit. And perchance you may know your score and question the rate, but watch how they handle it.
That's just the store average number. We haven't pulled credit yet. Just circle the months and payment and sign. Or give me your initials at the bottom.
Here is the part they never explain. The bank gives the dealer a rate, and the dealer is allowed to legally mark it up before they show it to you. And here is what most people miss. Nowadays, in a lot of stores, before you ever sit down, they may have already soft pulled your credit by scanning your license. Often they'll say it's protocol to protect against fraud. So most people oblige, but that scan can give them a snapshot of where your credit stands, unless your bureaus are locked. And here's why that matters. Wherever your rate actually starts, good credit or subprime, the dealer may mark it up from there. The markup sits on top of your rate, not instead of it. So that first worksheet is a test. They're reading how informed you are to see how much room they have. And here's the one they really like. Good income, but your credit puts you in what they call subprime, because now they may use your credit against you. They mark your rate up toward the highest the bank will allow. And since the income says you can carry the payment, they max out every back-end product they can stack on top. It's not that you couldn't get a better deal, it's that your situation leaves the most room in that rate to mark up. That is not about you. It is how the markup is built. So whatever number you see, it's often a guess about how much they can get, more than it is the truth about what you qualify for. For example, every point is about $2,500 over the course of the loan. A 2-point markup, about $4,900. That is dealer profit on your loan, and you never see it. It's the gap between the bank's rate and your contract rate. It is legal, it is common, and it is never printed on your paperwork. And they don't just inflate the rate, they also add back-end products through the interest rate. Things you'd expect to see in the finance office are now being added right at the sales desk. And again, a good salesperson will be like, throw on a few more points, or hold back another $3,000 on their trade. So remember, the bank basically gives the dealer approximately 2 points on your loan as a thank you for the business. But then the dealer will add whatever they can for their spread to lock in their profit in the back end, whether you buy the products or not. So when you get to the finance office, they'll first try to get whatever else they can, because that's their opportunity to get paid. If they don't sell products, they don't make money. That's plan A for them. But if that doesn't work, plan B is to switch it up.
Let me see what I can do for you here. What if I can get you an extended warranty, a maintenance plan, wheel and tire protection, and throw in gap coverage too, and keep your payment right about where it's at? I'm just trying to take care of you.
He won't name a number. He's feeling you out, seeing how many extra dollars you'll accept. And it doesn't take much. Every extra dollar a month, 5, 10, 15, 20, over 72 months is real money in their pocket. Sometimes they'll even stretch your loan to 75 or 84 months to fit more product in. A longer term hides a bigger payment. Because everything he just offered to get you, you're probably already paying for. It got baked in at the sales desk. He's repackaging it as a gift. Gap he names last on purpose. It's the cheapest one, $10 to $15 a month, and the easiest, yes, because most people actually need it. So the whole bundle feels like a favor. So decline the whole offer, all of it, and watch your payment drop more than you'd expect because you just pulled out everything they buried. Then, if you want Gap, add it back by itself. He won't love it, but he still makes a little, and you stripped out everything else. So the moral of this message is, know your FICO auto score, not your Credit Karma score, because they are completely different. Freeze your credit before you start shopping. And if at all possible, get your own rate first from your bank or credit union, then make the dealer beat it, not set it. But before you sign anything, find out what you actually don't know. Take the free Car Buyer Intelligence Test. Link is pinned in the comments.